Today's guest on the podcast is someone who has coached and mentored several different startups across India. He's not only an ex-investment banker but is also a venture capitalist and a strong startup enthusiast. Tushar Kansal is the founder of Kansaltancy Ventures, which is a venture capital firm through which he invests in new age startups and helps them provide a room for their growth. You know, they say that investing in startups is only a numbers focused game, but actually that isn't true. In this video, Tushar gives us a reason as to why that is the case through his decades of experience in the venture capital and startup ecosystem. Being a mentor and a coach to several young entrepreneurs from prestigious institutions like the IITs, he has an edge in this game only a few people have, as he has seen and done it all, from picking the right teams to helping startups scale massively. In this video, we demystify a lot of important topics such as the humongous rise of IPOs and unicorns in India, how to raise funds, how to approach VCs, about investment banking as a career, and how India can become the next Silicon Valley of the world. So if you are new to the channel, do hit the like button and consider subscribing as I bring out more such informative videos like this one. Now without any further ado, let's just jump straight into the video. Welcome to the podcast, Tushar. Thanks a lot for joining me here. It is really an honor to have you on the show today. How are you doing?
I'm doing very well, Surya, and thank you for having me. And I was watching the work which you have been doing, and it was really exciting, and I learned a lot. When we decided that let us do this podcast, and I was really looking forward to it, and I look forward to answering all your questions with a hand on my heart. And give the best information possible, which whatever I know.
Thanks a lot, Tushar. I'm really looking forward to our conversation about venture capital and all that stuff. And I was recently going through a fantastic journey you've had over the past few years, and it was quite intriguing for me since you have worked across a diverse set of roles ranging from venture capital and consulting to now spearheading your own VC firm. So how did your journey basically start, and what was the driving force which got you interested in this particular area?
Thank you, Surya. So I was attracted towards finance very early. I used to be I used to read a lot, and whenever I read, there was a dot-com boom was going on in 1990, late 90s, and that was a time when I was coming out of my engineering college, and I said, if you have to make a career, it is either you have to do it in technology or finance, and with that intention, I gave my MBA exams and got through MBA finance from University of Delhi. And I, after doing my studies from there, I just, I thought I'm made for finance. So, I've got a chance to work with the Big Four consulting, Deloitte and Touche. And then, I was on the buy side with Times of India's venture arm called Brand Capital. And then raised $2.5 billion of debt for the Russian telecom company MTS. And then I was CFO with a logistics company which is owned by the $200 billion American private equity firm Guggenheim Partners. So all this journey has enabled me to understand various aspects of finance, right from consultant side to buy side where you invest the money, and treasury side where you raise the money, and then as a CFO where you are handling all the parts of the treasury. So you are handling forex transactions, fundraising, investments, taxation. So it's the whole journey. I did digress from finance in middle. I started my own startup with a colleague of mine, and there I was primarily doing marketing. And then I realized that I'm not cut out for marketing as much as what I've learned throughout my life, which is finance.
That's an awesome trajectory you have followed, and I'm pretty sure you must have had a tremendous learning experience where you constantly pushed yourself to the brim, and getting out of it must have been really fun and challenging at the same time. And also you have been an investor in several different startups for quite some time now. So I would really like to know from you about the world of venture capital, fundraising and startups, and what are those key parameters which you generally evaluate before investing into a company?
So, investing it's a discipline. So, if you miss out on the discipline, then either you are relying too much on the written word, which is the documentation, or you are relying too much on news information, like, some markets are opening up and, so end of the day, you have to have a deep sense of why you are getting into a company. And why that company, why now, why you are investing now, and why them, why investing in that team. And so all those questions have to be answered in a very proper manner for me to invest in a company. And I have invested only in 4 companies, primarily my company, Kansaltancy Ventures. We are closely linked with more than 350 global investors. And it's not only about my investments, but we guide investments from a lot of investors. So, amongst the things which we look at from a macro perspective is the market size, that, what is the market size of the product of the company or the services of the company. Second, the most important is the team. Which are the horses you are backing? So end of the day, the team matters the most. It has to be a well-balanced team. If it is a technology company, there has to be a tech a person in the team at a very senior level, preferably a co-founder. And then, you have to have a person looking after marketing, because marketing is the name of the game after the product is ready. And then you have to have a finance guy and then a product guy. So, the team is the second thing after market size. And third is the business model. So actually 60 to 70% of the startups close down because their product is, the customers are not buying their product. So the business model, how do they plan to earn from that product or service? That for me is very, very crucial. And then, of course, are the hygiene factors, like how much money they're asking for, till how long will it last, and what are they going to do with that money, what are the 5-year financial projections, how much business they are likely to do, and also how much money they plan to raise again, and how soon. So all these things are very important, and in case the company is able to give a demo of the product, it works very positively. So, I encourage them to show me the product. And so there are other factors as well as, who are the competitors and what is the competition doing and how is this company's product different and better than the competition. So, to my mind, the team should also have a roadmap of the financial and non-financial targets which they are going to achieve in the next 1, 2, and 3 years. As in how many customers they will have at what point in time, how many vendors, which all markets which they launch, how many employees they are likely to have in the next 1 year, 2 year, 3 years. So all these things, they sound very MBA-ish, but more than that, they are the basic food on which investment as a discipline survives. And it's, although a large part of the portfolio companies of investors, they don't do well. It's only 2 to 3 out of the portfolio which are likely to do well. But no investor invests in a company thinking this company will close down. So, that conviction has to be brought about And that is what the founders also have to know very well in advance.
So you just talked about a lot of factors. So if you have to choose one particular factor which you would tend not to ignore while ignoring the rest while investing in a particular company, which one would that be?
Has to be the team, because if it's a bad product, a good team can pivot the business model and change the product. But in case the team is not good, then what do we do? I mean, end of the day, COVID happened. 60% of the startups had to change their business. And those teams who were able to change the business in the temporary side, in the short-term side, they were able to save cash burn. And once they saved the cash burn, then after vaccination has happened and markets are now opening up, they are back on the road. So end of the day, it is the people, who you are backing.
That's really great. Since you talked about a team being one of the most important parameters which you generally tend to evaluate. So what do you think about this whole scenario of virtual teams booming in? I mean, there are companies which have been operating virtually and startups which have been just starting out from forming a global team from countries like US, India, China. So what do you think about that?
There are some advantages of physical interactions. And, there is, the remote work has its pros and cons. So, it's difficult for startups that are starting during COVID, because as a small company, you build so much of trust together. And in this pandemic, it's hard to recreate that sense of trust. The trust you gain when you are in a shared space. You have a small team, you can't rapidly exchange ideas or sort out misunderstandings because you have to schedule for everything to be done over a Zoom. And what about feedback? Instead of just quickly chatting to them when you meet them in the hallway or a cafeteria, you have to schedule a talk when it's convenient for both of you. So at least, the internet lets you recruit talent regardless of where they are, because they can use it to contribute to the company regardless. So I feel that although remote work has built in a trust factor, which was not there earlier, but there are some things which come with a team spirit, and that sometimes requires the physical intermingling and talking informally, maybe in a cafeteria. So even before COVID, there was the blockchain community, and which was proud of building companies with people they have never met. If you ask any teenager or 25-year-old today, they have many friends they trust that they have never met in real life. Never. So they create real, authentic relationships online, gaming together or chatting on a call. Perhaps this different way of building trust is a generational thing. So I feel that this hybrid work culture is there to stay, and there has to be a lot of adoption by both the managers as well as the team people.
And one thing is that social media has really accelerated this trend. And also gaming has, gaming, especially through Discord channels and Discord servers, has really accelerated this trend of building, virtual communities. And I actually got interested in gathering more knowledge about this space through a subject I had back in college, which had these different chapters on how to register your company, the different ways to raise capital, valuations, and all of that exciting stuff. And from what you just told me now, that you have been a CFO and an investment banker as well. So maybe you want to share a glimpse on that as well, maybe telling us a bit about the world, the kind of work you have actually had to deal with, and how is the work-life balance?
So, when it comes to investment banking, it's about sourcing of deals. So you have to source deals. And to give you an example, there would be a large amount of companies always out there which want to raise capital or which want to raise debt, raise funding, basically. And if you talk to a large number of founders, many of them will say, give us the right price, we will exit our business. So there are, at any given point in time, huge number of sell-side M&As, mergers and acquisitions, and fundraise assignments which are easily available outside for you to sign up. But the point is, although we are living in a liquidity surplus world, we are living in a world where capital is easily available, but 92% of the startups don't get venture capital. And in investment banking, you might be having a lot of sell-side assignments, but the smart guys in investment banking, they run after buy-side assignments. So some founder telling them, I want to buy a paint company based in West India with this much production and with this much of turnover. And if you have that assignment, you will be able to close it for sure, because there would be some company or the other which will love to sell out. So there are founders who are always looking to capitalize on their business. So of recently, the IPO markets have opened up for the new age startup companies. So for the investment banking, when you talk about work-life balance, it is about having 1 to 3 good meetings every day, which means you have to talk to people increasingly online. Earlier, you had to actually meet all of them. And you have to travel because your business can be from anywhere. It is when the deal is in closing phase, when you are going through the ringer with the law firm chasing you and the law firm saying, we are sending you the document in the next 2 hours, and then you have to turn around fast. It is when the deal is in closing stages that suddenly it becomes a fish market. And suddenly everybody is online, where are you? And we have to sign this up within 2 days. And, we have to revert back. And did the reply came from the legal firm? Because both the parties will have their own perspectives. And you have to marry the perspective, especially legally as well. So all this calls for a huge amount of coordination between CA, CS, legal, taxation guys, and the buy side and the sell side and the consultant in between. So it is during that time that the work-life balance goes, you have to concentrate on closing the deal. And my wife used to be a senior vice president, head of capital markets at India's number 1 investment bank called Axis Capital. And there, the targets, and the work culture, it was really tight. I mean, you have to take morning 5 a.m. flight, and the document is coming to you at 11 p.m. at night. And then you are sitting on the document, and morning 5 you have a flight. And the CEO is on a WhatsApp group, and he's constantly asking you what happened on that deal, what happened on this deal, where the whole senior company management is there in the group. So investment bankers typically don't have a very good work-life balance. And but the good part, let me tell you the good part. After COVID, people have started trusting on online calls. So earlier the trust factor was missing. So if you can trust online, you can use it as a tool to create a roster of talent without location being an issue. That is one. Secondly, it has had a tremendous impact on the VC community insofar as pretty much all the companies that have an international mandate to invest have gone super international, because they have all decided that we can make a substantial investment without meeting in person. So your investors are, earlier you had to meet them maybe once, twice, thrice. Nowadays they are available online. And but that has meant that the deals have become more competitive. When you find a deal or an opportunity, regardless of where it is, there are 10, 15 other VCs that would never have been there in the past, and they can be there now because of the internet. So these are the whole, you can say the dynamics in the investment banking space.
So it has kind of become saturated to, actually close a deal. Is that so?
Saturated, yes, and very competitive. At the same time, it has become easier as well because technology adoption has really caught on. And so in many ways it has become easier, but yet more competitive.
Okay, that's interesting. And since you also talked about the IPO market, and we recently had such humongous IPOs such as Nykaa, Zomato, Freshworks, and we also had a huge chunk of startups entering the unicorn club recently. So what do you think about this exponential success of companies, and what are the upcoming trends you see in the VC or fundraising space?
So, Surya, when we talk about the Indian market, see, we are working with US, UK, Dubai, Singapore, Hong Kong, and India.
Okay.
London used to be the financial center for Europe, and Hong Kong the financial center for China. Singapore the financial center for Southeast Asia and South Asia, the APAC region, Asia Pacific. Hong Kong is facing problems because the Chinese government has recently come out with new laws. London has gone down because Brexit. Brexit happened. London moved out of the European Union in a large way. So Dubai Stock Exchange was never so popular because in Middle East, most of the large market capitalization companies are oil-based or gas-based. So the liquidity available for other type of companies is, although it's there, but somehow the stock exchanges over there are not so popular. So what does a company, the main pain point for any investor sitting in India is how to get an exit from the company in which you invested. Exits in India have historically, legacy point of view, been very difficult. And a company, if you look at the term sheet which any investor signs with a startup, in the exit clauses, the first thing he mentions is that the company will come out with an IPO within 5 years. Why? Because IPO is the most preferred route because it provides you a liquidity window which is all day. So anytime the investor needs money, he can sell some of his shares and take money because the shares are being traded. So earlier, the IPO window on Indian stock exchanges, which are, primarily two of them, Bombay Stock Exchange and National Stock Exchange, the IPO window used to be very small because SEBI was not allowing these loss-making big startups to list. So these startups had to find ways of listing either on Singapore Stock Exchange or on the US stock exchanges, NASDAQ and New York Stock Exchange. So Make My Trip has been listed in New York Stock Exchange since ages. And Freshworks recently listed on NASDAQ at a valuation of 10 billion. And Singapore, although there hasn't been a lot of listings on the Singapore Stock Exchange, because any company which has the wherewithal to list in Singapore can easily list in NASDAQ also. So once they compare the valuations they are getting, so they always realize that they are getting better valuation at NASDAQ. So, but there are a lot of companies who have holding companies in Singapore, like Flipkart. Flipkart has a holding company in Singapore. And that holding company was what Walmart bought when it bought Flipkart for $21 billion. Now, with the opening of the IPO window in India, starting with Zomato, and now Nykaa, and now Paytm, it is a big thing. It's a very big thing because Exits have been difficult in India, as I said before, and now these companies will be able to command the valuations which they were getting offshore, and Indian investors will get a chance to participate in the success story of India-made, Indian customer-centric, new age tech companies. So I welcome it, and I feel that this trend will only benefit Indian investors because they will be able to participate in the success journey. Having said that, a lot of these valuations which are floating around of these new age tech companies, if you measure them by the legacy metrics like profit multiple, so if you try to measure them by those, then it will disappoint you. But end of the day, a valuation is always as to how many people are willing to pay that price. And till the time the Indian stock markets are willing to pay the price, which these startups are commanding, the value these startups are commanding, I don't see it as a challenge.
That's really interesting, and that really makes me even more excited to follow this particular space in the future as well, since I can see that it has such a tremendous growth potential. And I also recently came across this statement while reading The Psychology of Money, wherein the author quotes Richard Feynman, and he said, imagine how much better physics would be if electrons had feelings. And then he adds on to say, well, investors have feelings. And that was such a powerful statement, which made me wonder as to, how hard it must be for an investor to actually deal with those mental biases, perceptions and whatnot while deciding whether to invest in a company or not. So what is your take on that? And do you think it is right for investor to take a decision based on emotions before investing in a startup, or should it just be more numbers focused?
So there are three factors which move a market, stock market: liquidity, emotions, and fundamentals. So fundamentals means the profit and loss, the financial performance of the company. Liquidity means how much of money is chasing that stock market, how much is coming from financial institutions which are abroad, how much is coming from Indian financial institutions like LIC, how much of it is coming from DFIs like mutual funds, how much of it is coming from retail investors. So these are the four constituents of liquidity. And second is fundamental, so the financial performance of the company. And the third is emotions. So, there is a term called beta. Beta means that if the foreign stock markets fall down, then how much Indian market will fall down because of the sentiment? If foreign markets rise, then how much will Indian markets rise because of the sentiment? So when you look at the beta of Indian stock markets, we are a high beta country. So we are very emotionally driven. If Nasdaq will rise by 300 points, the next day the Indian market will be like 1000 points. If Nasdaq suddenly falls 200 points, Indian market will fall 1500 points. So we fall a lot, we rise a lot because we are a high beta country. And we are very emotions driven. When there is negativity in the markets, we panic. And when there is a good news in the market, we are euphoric. We start putting in money, dal do. So these are the three ways in which markets move. Historically, liquidity has been very easily available to global stock markets since 2009, because central bankers of the world in Europe, US, China, Japan, and Southeast Asia, the central bankers have been printing currency. The markets are running on easy availability of money. So, if I am a hedge fund, I put in $1 million of capital and I can raise $9 million of debt, 90%, at an interest rate of 0.25 to 0.5% per annum. In 1 year, I have to pay 0.25% or 0.5% if I'm taking dollar debt. So it is so easy. You put in $1 million, you take $9 million, now you have $10 million. And now you invest $10 million in asset classes, in stock markets, in commodities, in forex, which means foreign currency, in real estate, in gold, in cryptocurrency. So everybody is doing the same. If you look at the profile of the Western economies, earlier they used to have manufacturing. All that manufacturing has moved to China and Southeast Asia, Taiwan, Japan. It has moved. And now to Vietnam and India. And the primary constituents of the economy of the Western world is financial services and technology and defense. So they are just money managers. Now they are managing money. They manage the dollars. And everybody of them, because of easy availability of loans at very cheap interest rates, everybody is borrowing and putting on asset classes. And that is why the Western governments are very afraid that they are very afraid that if we stop this money printing, which we have been doing since 2009, then once the asset values start collapsing, everybody will be in panic. The middle class, the hedge funds, the private equity funds, the commodity funds, everybody, and the economy will go into a recession. The world economy will go into a recession. So these are, I can talk more about micros, like because of this easy availability of money and the inflation is rising globally. Things are becoming expensive because a lot of money is chasing few things. So we are living in that kind of world.
That's a pretty interesting trend. And now coming on to your daily work as a venture capitalist. So how does the day in your life look like? And what is that stuff which people generally wrongly assume is fancy about being a venture capitalist, but actually isn't?
No, so venture capital sounds fancy because it's like a festival. Venture capital is like a Bollywood movie, Ekta Kapoor serial. So, if the investor asks you this, you should answer this. If, so on everything there is a thesis. So people have overplayed it so much because media gives you these numbers that Freshworks at 10 billion, Udaan at 3 billion, and suddenly, Revolut was a German fintech company. Its earlier funding round happened at 3 billion. And then SoftBank said, we want to invest in Revolut. And SoftBank straight away after 3 billion round, they come in at 33 billion. So the guy who's struggling in his business, yesterday I got a pitch deck. Would you believe it? A pitch deck from a parlor in Andaman and Nicobar Islands. I can show you. So this guy said he has been in the space for 5 years and now he's looking for funding to have a parlor chain. Amazing, man. A parlor sitting in Port Blair sending me pitch deck. So I don't blame anyone. Everybody is excited. But, end of the day, it is a discipline. So, you have your thesis and be very aware that, why you are backing a company. So all your questions should be answered. And secondly, at which rate you are entering. I don't subscribe to SoftBank's 3 billion to 33 billion kind of stories, valuations. And be in it for the long term. There will be everything in life moves in cycles, and especially the stock market, the commodity markets, everything moves in cycles. So you will face cycles eventually, but be in it for the long term, back the right people, and have a sense of discipline while investing. And I think, that is the truth, that we have to separate the froth from the real. And that is the juice about venture capital.
That's really exciting. And, that also brings me to this very interesting question about youth-led entrepreneurship and student-led entrepreneurship, because you yourself have been associated with the entrepreneurship development cells of several prestigious IITs. And also the youth are seemingly becoming more aware about entrepreneurship as a career. And we also have had the likes of Nitin Kamath and Ritesh Agarwal do it. So what do you think from your experience? Are those mistakes which students tend to make while building their own venture? And do you see the next Tesla or Amazon or Google rising from India?
See, Indians have, look at our past. Our parents have seen socialism. They have seen government-led economy. So most of our parents were either in small businesses or they were doing a government job. Money was not available. So we were like very few salaries. And so the risk-taking capacity of an individual coming from Indian middle class is low. Secondly, we pass out from an educational system which tells us, shouts at us till 12th class, don't take risk. Play it safe. Engineering, medical, MBA, done. 1 lakh rupee salary. So, then, communities help each other. Sindhi guy will pull out all the Sindhis to US. Gujarati guy will pull out everybody to buy motels or be in the diamond space. A Telugu guy will pull out all Andhras to IT in US. So the communities also, they build these stereotypes. And an Indian entrepreneur, it is, we are good CEOs. If we are like, everybody now wants an Indian CEO because we work in a multicultural environment. And we are team people, and we are coming from a very low background, so we value what we have. But at the same time, I have seen with a lot of Indians, the first sign of success which they get, it gets onto their head. They just feel like selling at the best price, buying a farmhouse, and just stopping everything. The foreign guy generally does not do that. They keep on pushing at it. They keep on having new targets. And so I think there is something to do with the socialist background of our country. But having said that, since 1990s, the awareness levels is huge. I mean, it is amazing the kind of things which Indians have been doing. I was in a cab in New York City. I think it was 6 years back, and the driver was a Bangladeshi. And he started talking, Shah Rukh Khan, and then this and that, and he said, amongst the Asians who are there in US, the profile and prestige of Indians is separate because they are seen as CEO material. So there, you have it. So basically, I think, the conditions are right for the youngsters to take to develop something in an entrepreneur way. And, but, later on, live with it. Don't blame anyone. It has to be your decision because it's not easy. So, you have to really fight it out. Markets are competitive. This guy, Bill Gates, said that out of 1,000 investors he met, 3 or 4 invested. So the success rate is 0.3%, 0.4%, which is just like IAS, the success rate of raising funding.
Or getting into IITs.
Or getting into IITs. And the India with the main thing with India is population. On everything there is a line. And population spoils infrastructure, it spoils everything. Everything is a line. Our passport is the least preferred passport when it comes to visa-free travel. When it comes to visa-free travel, अगर आपने 1.4 billion Indians को allow कर दिया visa-free, so they will all settle down. And so those are the constraints we are living with, but there isn't a better time than today. Liquidity is available, awareness is there, and markets are adopting new products like anything. And India is a huge consumption market. Look at the D2C companies, Mamaearth and Boat headphones. Everybody becoming 100 crore, 200 crore turnover in 3 to 4 years. So, if you are doing on the consumption side, it is very, very exciting. And these are the times which offer you the best chance to be a successful entrepreneur.
That's really great. And, now coming on to the rapid fire round of the show, and this is something which I have started doing quite recently. And you have to answer the questions followed with a rationale behind that answer. So let me know if you're ready and we'll start with it.
I'm all raring to go. Will I get a hamper?
I'm sorry?
Will I get a hamper like Karan Johar?
Yeah, for sure, after the podcast.
Okay, sure.
Perfect. So here we go in 3, 2, 1. So fundraising or bootstrapping? If
it is possible for you to bootstrap like Zoho and Freshworks, then bootstrap also works. Don't let anyone tell you bootstrapping does not work. But if you are getting scalability, fast scalability because of external capital, go for it.
Okay, so student entrepreneur or unexperienced entrepreneur?
No, student entrepreneur. Because,
and why is that so?
Yeah, because I do not want any middle class family to blame me that I stopped the degree of any student. Although, if you look at the successful people, they are college dropouts. But, having said that, if you are studying something and if you are really studying to build knowledge, then take that knowledge, not for the degree, but for acquiring the skill. And then, entrepreneurship always will give you a chance.
And that's really important because we are moving towards this skill-based economy, and in the coming few years, the skills are going to matter the most instead of your college degrees.
Absolutely.
So yeah. And so the third question is angel investing or investing at a later stage?
Angel investing is very difficult. You have nothing in front of you. There are just 2 young people, standing in front of you in sports shoes, telling that they want to create something. And so it's like a lot of darkness. But when the product market fit is established, the minimum viable product and then product market fit, and then you see the customer is there, people are paying for it, the product is ready, the first one is ready. So that is beautiful. You just put in the money, it goes into marketing, it scales up, your valuation goes exponentially, and you have the return. So given a chance, I will say that post PMF return investment should be more preferred.
Okay, that's interesting. And remote team or an in-office team?
A remote team. But hybrid, like sometimes come to office for team building.
So a mix of both.
Yeah.
Okay. And one industry you are absolutely bullish about in the near future?
Gaming. I mean, there have been 2 gaming companies which came in the last 1 month. And these guys are so young and they are making money from gaming that they don't bother whether they take external capital or not. One of them made 65 lakhs in 4 months. The other one made 30 lakhs and he was first year college student. And
That's awesome.
yeah, so if you're getting so much of money, then it's amazing. So gaming, esports and gaming.
And one mistake and one learning from your VC career.
Mistake that sometimes you tend to get emotional about certain investment. So there have been companies which have approached me, and I'm a nationalist, and somebody saying that we'll build Sanskrit courses, and so it will look very fancy, but don't expect a return from that. End of the day, he's not only coming out with a traditional product, but he has to put in money to build the market. So that money will go in for building the market. And recently, there have been impact companies like environmental, social, and corporate governance. And these impact companies have targets like women employment, women participation, environmental issues. And, those investors who invest in these companies for these reasons, it is very good for the society. But at the same time, I have seen impact investors getting very much, it is very challenging to make a money on that. So make your returns on that. So even if you're like, there was an investor who invested in Shiro's, the company where women entrepreneurs and women employees are taken. So that person, the mandate of that person wasn't to invest in such type of company. But he said, okay, I'm making so many commercial investments, I will make one for women. So if you are very clear about why you are doing it, no problem.
Then just go for it if you're clear with your goals and
just
everything.
Go for it. I mean, so what? You're meeting different kind of targets, and you can publicize that in your investment papers.
But you have to be very careful alongside, because you'll obviously be facing a lot of challenges, ups and downs along the way.
Yes.
So yeah. So that was a really interesting round. And what would be your advice to the young entrepreneur students or people who are just starting out? And also if you have any book recommendations to share with our listeners.
Okay. So my advice to young entrepreneurs is that more than thinking that you have to do entrepreneurship because it is fancy, you should identify the problem statement which you are wanting to solve. If you are very clear about the problem statement, that I want to solve this problem, then you will be able to form a good team, and they will be motivated. You will be able to get the money, the funding. For people, those are clear about why they are doing things and how they are doing things. Money is not a problem. So focus more on why you want to do something, your passion, whether you are really made for it. And the books, 0 to 1 by Peter Thiel was one which I really liked. And on objective key results, OKRs, the guy who started it all, John Doerr, measure what matters. And that is I liked a lot. And if you are more into you feel stressed quite early, then instead of relying on medicines like antidepressants and stuff like that, those are all useless things. You read good books, do meditation, like Stillness is the Key. That's a book, Stillness is a Key. And I will suggest youngsters to adopt spirituality early in their life. You can follow, I don't know, Shri Shri Ravi Shankar, Sadhguru, and Sister Shivani, or you can do yoga pranayam by Swami Ramdev, and just get a feel of spirituality early in your life, because we are living in very challenging times. So, we are living in times where their population is high, and nothing is permanent. Companies open up, they close down, they decide to hire, then they decide to fire. And, at the age of 45, you start thinking, oh God, I have worked for 20 years. Then, your salaries are high. Then the company starts thinking, why am I paying 1 crore to a 45-year-old? I can replace him by paying 20 lakhs to a 25-year-old. So, you start facing those kind of things. And so maintain your health, focus on health, family, focus on spirituality, meditation, read books. So that is my advice to the youngsters. And as you asked, if you want to go into entrepreneurship, be very sure what you are trying to solve and be in it for the longer run. You will definitely achieve success.
I've never really tried spirituality myself, but whenever my mind feels cluttered, I just go out for a 5 kilometer or 6 kilometer run. So that really, motivates me to do stuff when I come back.
Very nice. Very nice. Yeah. Running is awesome. Very nice.
Yeah. And I do it every day without fail. So since the past 1 year, so that has really been life changing for me. And I also read a lot of books. I've recently started reading a lot of books.
Very
and
nice.
That is what, inspired me to start with this podcast as well. So thank you so much, Tushar. It was really awesome speaking to you today. And I really got to learn a lot from our discussion over here. Thanks for taking out the time for being on the show. And I wish you the best.
Thank you so much, Surya. And, it looks, you look like a runner. So, you have that fitness and you have that aura, that mind is fresh and active. So, and the questions you asked, I was constantly thinking, kaise jawab dunga,
Yeah, it involves a lot of research. I woke up till 2 a.m. at night, last night.
Oh God, really?
Yeah.
Oh, thank you so much.
Because I have a day job as well, so that finishes at around 8 o'clock. So I don't have enough time to prepare questions for the podcast. So I usually tend to stay late at night for preparing the questions.
Oh, very nice. Thank you so much, and thank you for working so hard on your podcast, which is your hobby more than any kind of work. So thank you so much for inviting me, for having me. It was really nice talking to you about so many facets, and I wish you all the best in your personal and professional journey. And thank you once again, Surya.
Thanks a lot, Tushar.